If you told someone you expected a tiny company, virtually no assets and income, to go from being worth pennies a share to rallying above $200 a share, you'd be surprised. But the reason is marijuana. Joining me is Chuck Jaffe from Boston. What is the story from your column today about this Medtronic, which went from nothing, that shot out of a cannon, all because it has a business to do with marijuana? What's the story?
Well, it's not Medtronic, it's Medbox, which is what used to trade on what used to be called the pink sheets. It is a very tiny company that this year may get to $5 million in revenues. Yet last week, because of a story that was written on MarketWatch that was talking about how folks might invest in legalized marijuana trade after we now saw that more than 18 states and D.C. are now at a spot where they've legalized medical marijuana, this stock went from about $4 a share to $215 a share. It had a market cap of $2.25 billion, at which point management came out and played the buzzkill. They came out and said, guys, this is about how we have no float. This has nothing to do with our business prospects or our economic conditions.
So, so what do investors do? I mean, ultimately, you mentioned this is on the OTC pink sheets. This is, in a lot of ways, a cowboy part of the market. You know, we saw during the crisis when GM went bankrupt and they created a fake GM that went on the pink sheets. That shot up 3 or 4 times with cash for clunkers, even though that was a bankrupt company that was going to be the bad assets. I mean, when things like this happen in the pink sheet market, should regulators be worried? Is it just a matter of doing business? I mean, you see things like this from time in this market, and it's a bit concerning to some extent.
Well, regulators are never going to be worried about this because functionally, if you're trading on the pink sheets, you really don't fall under most regulations. If you're on the pink sheets, you don't really you don't have to be registered. If you look at Medbox's financial statements, they basically say, you know, we're not following generally accepted accounting principles here. If we did, you might feel differently. And that's one of those things that people need to understand. And here's the thing. They saw a story on MarketWatch. That is what prompted them. And of course, at least MarketWatch, we like to believe, and I believe, is a reputable news source. But the fact is, you've got 15 things in your spam email filter that are about penny stocks and things like that being hit up. And the problem is that those things are being pumped. And it's the same basic story. It's always, here's a little tiny stock. It could be the next fill in the blank, Exxon, you know, Budweiser, whatever it might be, that's going to be some giant. Medbox hitting it and having this point, it's going to be the story that's then used like, oh, this could be the next Medbox. That could be the next Medbox. And the truth is, people who invest in this stuff, who take a flyer, they're sort of thinking, well, if I have one Medbox, it makes up for the 9 that fail, right?
Well, you only need to
but the problem is, it's not one of 9 that fail. It's one of 100 that succeed like this.
Yeah, absolutely. I mean, if you look at just the broader market itself, that's that 1 in 10 theory that people who invested in tech companies got lucky with, say, Cisco when they invested when it was creating, and as long as they got 1 Cisco right, they can get 9 wrong. This is not that. I mean, pink sheets, as you mentioned, it's 1 in 50. They don't follow GAAP. They've got a lot of foreign companies that just want to be access to U.S. investors, so they'll list over here on the pink sheets. If I'm an investor, if I'm a day trader on my E-Trade account, is it easy for me to invest in these pink sheet companies?
Well, it's easy to invest, but it's part of the problem. One of the things that happened with Medbox is it has such a small float that once there's demand, you don't have bid and ask spreads that you can see. So you're in a situation, think about this like, you know, if you go to the supermarket today and you need to get your Thanksgiving turkey and there's 1 turkey left. If the supermarket suddenly want to say, well, this one, you know, it's not $30 anymore, it's $50. No, it's $70. You could wind up seeing the price go astronomical. And that's what happened with Medbox. $4 to $215 a share. By the way, it's already back at $50 a share. And guess where it's going? It's going back to $4 a share. The question is it going back to its 52-week low? Because the 52-week low on this stock, 3 cents.
So very well it could be.
You could have bought it thinking, hey, it's $2 a share, and I love the business prospects and whatever, and you might be right. But what happens all too often with pink sheet stocks, they have a curve that goes up, and then when they run out of momentum, they don't go back to where they were. They go straight into the ground.
So at worst case at 3 cents, I'm saying if it goes straight in the down, we're looking at a penny or less. Terrific. Well, thank you so much for joining us, Chuck, and giving us the lay of the land when it comes to Medbox and penny stocks and the risks that you might be running.